You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music can mean but one thing. It is time once again for Education Wednesday. Time for everyone's favorite day of the week. Yes, it is time to roll out the old OBC. My name, of course, is Mark Longo from the THE optionsinsider.com, as well as from the network upon which all of you folks are binging. Glad to see so many of you are enjoying the latest addition to the Wednesday shows, which is, of course, the Futures Rundown. If you haven't checked it out yet, make sure you're getting the full network. The easiest way to get everything we do here on the on-demand side. And then, of course, if you want to go above and beyond, you want an additional exclusive podcast feed just for you, the optionsinsider.com/pro. Going to get 2 additional shows. Going to have awesome giveaways and a whole bunch more. And joining me on the old program today, the black-hatted one himself, our guest host extraordinaire on the Election Night Spectacular, also subbing in on the option block recently. I've been getting a lot of Dan, a.k.a. Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show, sir.
Hey, man, how are you? I am glad to be here and glad to be hanging out with our Options Insider Radio folks.
And tell us where you are. You're at a pretty cool place right now, sir.
Yeah, man, I am hanging out at the CBOE at the moment, and we are doing our annual mastermind event here. So small group, we work on trading plans and trade together. So doing that and just taking a little moment to talk to our Options Bootcamp folks.
We're kind of reversing roles. Last week I was at the CBO and you were beaming in, and now we are reversed. Maybe I'll see if I can swing by later and say hi to your folks. I feel bad. You're right down the street here.
All right.
The studio here. And also, really quickly, you folks like what you're listening to, throw us some ratings, some reviews, just like our 5-star review this week comes from Chandler. He says, just discovered the whole network. Thanks. Well, you're welcome, Chandler, out there. And Dan, I'm going to fire up the old options drills out here. But while we do that, I want you to think, sir, because I'm also going to fire up the random number generator. You know what that means it's giveaway time for our pro members. You tell me when to stop, then we will name our grand prize winner for this month. Here we go.
Colin Boots. Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to the options drills, a portion of the show where we tell you what strategies we're keeping an eye on and also how you can incorporate some advanced options topics or tricks or techniques into your own options trading out there. Dan, I'm on the trigger finger. You tell me when to stop whenever you want. Could be now, could be in a few minutes. I will hit the button to stop it, sir. It's all on you now. So listen,
All right,
if you don't
ready, set, not yet.
Yeah, dude,
I'll tell you what.
I knew you were going to do. I knew you. All right. Today's options drills topic, listeners, was actually suggested by one of you, a listener. This is Lisa Manchester, loving the ladies right in. And she says, do you have any thoughts on strategies that could work well for the rest of the year? Thanks. Well, there's a lot of things to talk about. Obviously, we are recording this, listeners, here mid-November, about a week after the big, some might say surprising, some might say not, election results. I don't think anyone had the degree of market movement we saw as a result in their playbook. Just extreme upside in a lot of the markets out there, equities certainly. And then, of course, extreme downside in the vol markets. And so that this the degree we've seen both of which has been pretty interesting. We joked last week on the show that pretty much you could dust off the oldest of old playbooks, which is just fade vol, and you pretty much did pretty well. If you also wanted to bank on a little bit more directionally centric, maybe just a relief rally, that also worked out, even though we've had extreme relief rallies at this point. People are very relieved, Dan, to put it mildly, out there. All right, but let's start with some basic stuff. And again, Dan, whenever you want me to stop, you just tell me. Well, obviously, we're in a lower vol environment right now, so we'll start with that. Strategies that work well in a low vol environment. Obviously, given the market's just tendency to want to keep going up right now, it's hard to say, hey, you need to get the hell out of Dodge, even though you could be easily feeling a little bit top heavy at these levels. We were already feeling a little top heavy before, and this extended run really has just stretched things. Even people like Warren Buffett are sitting on a mountain of cash right now. People are debating what that means, but I think for a lot of people that means he maybe thinks things are a little bit fully valued right now. He's looking for some opportunities to buy some stuff, perhaps when it pulls back. But that is debatable out there. But if you're one of those people out there, maybe you're a little bit nervous, but you also want to keep enjoying the ride to the upside and what a ride it has been, then, well, you're in luck because vol has cratered since just even our last show. We were in the low 20s heading into the election. We're at sub 15 now. In fact, VIX cash sub 14 today. Saw a 13 handle. I haven't seen one of those in quite some time. So just straight up net outlay levels from a vol perspective, you will be paying less for your options that you buy. And of course, when we're looking at protection in the indexes, we're looking at, of course, out of the money puts and looking at the skew levels, which you can track for yourselves, listeners, all for free. Just go to cmegroup.com/TWIFO, TWIFO. That will give you access to our This Week in Futures options reports. I've talked about them on this show before. It's one of the best tools I know to track skew over time. So you can look at it right now and see what the skew was heading into the election. In fact, looks like skew really peaked in terms of premium to the puts back on Halloween. People were actually starting to crush skew and crush vol a little bit heading into the election, which again is kind of strange. We rallied hard on election day, not something we typically see. Usually we wait till after the event is done. So you're looking back to Halloween, we had vol, just straight VIX cash was in the low 20s, around a 22 at that point. Puts were 20% bid on top of that. So you were paying an extreme premium for your 25 delta put. Fast forward to today, vol has obviously collapsed. VIX cash, which is not quite at the money S&P 500, obviously it's a 30-day approximation plus some skew worked in there. But right now, VIX cash is sub 14, so you're talking a 13 handle, so a big net vol move. So obviously you're already shelling out less money. And also on top of that, the put skew has also collapsed. Puts were 20% bid. They're less than 15% bid now. And again, that's on top of a lower overall vol level as well. So if you're looking to hedge and you were a little bit skittish, you were a little bit concerned, but you still wanted to keep the ride going, putting some puts in your back pocket for a rainy day now is the cheapest it has been in some time. Dan, if you have anything you want to say to me before we start, have at it. And then B, what are your thoughts on rocking some puts against your equity right now versus, let's say, a week ago?
Well, I do have a couple of things to say, Mark. The first one is stop.
Aha, there you go. Luckily, I knew what you were setting up for, so I had my finger on the trigger. I was ready to go. No surprises for me. Listeners, reflexes like a cat. All right, who did Dan pick? He tried to be tricky, listeners. Got to get up pretty early to trick me. Oh, Stegosaurus, one of our regular offenders here in the live chat. Good to see him winning. Stego, congratulations to you. Our producers will reach out post haste for all sorts of goodies, one-of-a-kind, unique, bespoke stuff coming at you soon. See, it pays to be a member, listeners. In this case, quite literally, because some of the stuff in those boxes is pretty cool and one-of-a-kind. So check it out. Maybe we'll get some of Dan's books and stuff them in the boxes one of these days. We even get some educational stuff. They're pretty cool, listeners. All right, Dan, you have given away a very valuable prize. Now you want to dispense some wisdom to the folks, sir?
Yeah, I mean, one thing to look at is, I mean, I've been known to talk about PE ratios on the show on a pretty regular basis because a lot of people look at those for valuation purposes. But what is even more important is the leading PE ratio, or excuse me, I should say the forward PE ratio is what most people call it. And what that is they take the expected earnings over a certain period of time. And that has climbed recently to, I want to say, like about a 3-year high. If you've been looking at the trailing 12 months PE ratio for a while, like that's been pretty high, but expectations for stronger and stronger earnings have been out there. And that's really what was driving it, was that forward PE ratio, which really wasn't that high recently, but it kind of is now. So, I mean, that is definitely likely to weigh on the market a bit. And yeah, I mean, I wouldn't be surprised if we see some sort of a pullback. But to be honest, I wouldn't be that surprised if we keep going too with further market enthusiasm and, you know, just pricing in future inflation that may or may not come with the incoming administration.
The other side of buying protection, listeners, you might be thinking, hey, maybe I want to generate some income. I think things are going to hang out at this level for a while, I might be prone to do some covered calls or some short puts or maybe even a collar protection strategy that has an income component. The downside of that is kind of what we were just talking about. We were just saying vol levels are lower, so the amount of premium you're generating, the amount of income, which again is kind of the goal of most income trains, the amount of income you're generating from these is going to be demonstrably less. So something to bear in mind, not going to be perhaps as attractive in this low vol environment if this persists throughout the end of the year into early next year as it would have been, let's say, just even a month ago. Now, the flip side of that is lower vol means you have a better chance of keeping the premium that you sell, aka not blowing through your strike in either direction. So you're going to make less, but you have a chance to keep it. In fact, some folks really like writing premium in low vol environments because you're kind of just drifting around, not doing much. You're making less, but you have a better chance of keeping it. So if you're out there saying right now, man, this is my time to shine on the income side, it's going to be a little bit more challenging. Remember, if you're selling covered calls, you're surrendering that upside. We've seen that upside has been explosive of late. You talk to our buddies who do a lot of back testing, like Mr. Matt from ORAS. He's very anti-covered calls right now because you're surrendering a lot of your upside in these explosive moments. So if he's selling covered calls, he's only doing it as call spreads or things like that so he could continue to participate to the upside. So if you're going to surrender that upside, which has been explosive lately, make sure you're getting paid for it. On the flip side, short put's not going to pay you much either. We just talked about how the put wing is lower, overall vol is lower. you can still use them obviously as an entry point to you getting long and initiating positions. That obviously is still better than just working a limit order in the stock. Just bear in mind that the amount of income you're going to take in for these trades is going to be lower than even just a few weeks ago. Dan, what are your thoughts on income trades in this environment right now, sir?
You know, I would say they're trickier than they have been, in a lot of ways echoing a lot of the things that you just said. But, like one thing for me is really, really caring a lot about the volatility levels. We always have to remember we're trading options for an edge. Nobody can predict the future. We're trying to play a game where we have either a greater chance of winning or a greater reward relative to our risk, or some combination of the two that should lead to a statistical profit. And one of the components going into that is selling, well, if we're selling options, is only selling them when they're overpriced, selling overpriced volatility. And, it still is in some names, but it's not universally true like it used to be. So we need to be a little bit more selective. I don't know. I wouldn't be, like I said before, I wouldn't be surprised if we pull back or if we continue this. But I think the chance of explosive moves to the upside in a typical stock are probably not, they probably are a little bit higher than they otherwise would be, but just in specific names. Names like current and future Trump trade names that might benefit from the incoming administration, because if Trump says, we're going to start, doing blah, 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 is the first day I get into office, well, that stock's going to explode. So, yeah, you got to be a little bit more careful, and you really got to make sure you're only selling these options if the implied volatility is overpriced. Otherwise, you're just doing it for a negative edge.
Yeah, someone brought up on our election spectacular that we're getting back to that realm, Dan, where you wake up every morning, you don't know what he's going to tweet. And as a result, what's going to happen to whatever name he tweets about. So we're getting back to that environment again, where reading the Trump tweets is going to be a full-time endeavor. Dan, you've been all over long straddles of late. You've kind of been the straddle guy on the show of late, which is interesting because we haven't really been that keen on long straddles in the past. I'm curious right now in this environment, vol is obviously lower. What would you tell our folks about dipping their toes into long straddles?
Well, right now I don't have any on. I'm kind of in a wait and see period, but I think just basically for the opposite reasons of what I just said, if implied volatility continues in its downward trajectory, at some point, buying options starts to become very, very attractive. And because of these possibilities of explosive moves to the upside in very specific names, and pullbacks that could happen for geopolitical reasons, or just people start to think maybe we were a little overzealous, or continuation of the upside, we still could get some of those moves. But I think, generally speaking, this VIX level, this implied volatility level across the board, maybe isn't quite there yet. But hey, man, that's why we wait for signals as traders.
Same thing with signals. I know you spend a lot of time, maybe you're doing it today over there at your mastermind session, talking about time spreads. You have a whole system you developed about that. Right now, we're heading into this long volatility environment. It seems like this low volatility environment, it seems like this is going to persist through the end of the year and probably into early next year. What are your thoughts on your traditional, let's not go crazy, let's not go funky diagonals or ratios anymore. Let's just go straight, your typical long at-the-money calendar, sir. What are your thoughts about that in this environment?
Recently, long at the money calendars have been working freaking swimmingly. Yesterday, I had to be out of the office and leave early to get to the SIBO to get set up and such. So I definitely didn't do any trading yesterday, but, just kind of perusing a little bit here. I always love to set up calendars in such a way where I'm selling a higher volatility in the front than what I'm buying, which gets tougher to do, on Thursdays and Fridays for reasons we've talked about in the past on the show. But I mean, right now, I don't see a whole bunch of that. I see a lot of pretty fair valued time spreads. So I don't know. I mean, I'm not jumping on them. I'm not in love with them. Just as much as I said, I wouldn't be surprised if the market goes, higher or lower. I wouldn't be surprised if it stays where it is either, because markets tend to run and then rest, as one of the guys I work with likes to say a lot. I know I sound like a real freaking Gene Dixon over here saying the market could go up or down or stay where it is. But if we did get that run up in the market, and the past several days we've had kind of a rest, you look at any chart just from a pure pattern recognition standpoint, and you tend to get those longer periods of rest. So I don't know. I mean, I'm giving you the long answer, but the shorter answer to your question is time spreads could be all right for the historical volatility reasons, but I'm not in love with them because of the implied volatility reasons.
All right, so this is kind of your basic overview. Let's see, who was that who asked that? That was listener Lisa Manchester. A lot of the things you might expect are pretty much going to hold course right now. Vol is lower. Put wing has come in quite a bit as well. Skew has come in, so it is a favorable time if you were looking to buy protection. Not saying you have to, but if you were looking to do it, it is much cheaper now than it was even a week ago. So something to bear in mind, certainly a month ago out there. The flip side of that, of course, some of the income trades I know a lot of you love, your covered calls, your short puts and things, not really going to be paying you a lot of it. So you have to ask yourself, is the juice worth the squeeze? You're out there in Ford trying to sell a covered call for 5 or 8 cents. You have to ask, is that really worth it? Ford's probably not going to get acquired tomorrow. It's probably a bad example, but still. Just one of the many examples I've seen come across my radar of late where is it really worth even doing at that point? So just something to bear in mind. You are surrendering your upside in that case, and obviously short put, you are committing to buy the stock there. So you are incurring risk, so just make sure you're being rewarded for it. Don't just keep doing the same trades because you've done them before. Long straddles, long calendars. I'm with Dan. They're not really super sexy at this moment. Straddle's going to be cheaper. That's the only real benefit it's going to have right now than it was even a couple of weeks ago. Dan, anything else floating your boat in this low vol environment? Are you really jazzed about iron condor ratio swaps, sir?
I don't know. I'm in a very, very wait and see sort of mode, except for, just except for some of the few, there's a couple Trump trades that I still have on. And I've got this NVIDIA trade on, but it's a little bit longer term. I'm in a very, very wait and see mode. Let's see a little bit how some dust settles, hear a little bit more of the talk, see who gets put into cabinet positions. And when those trades line up, I'll probably have a lot more to say about that, I guess.
You're pulling a Buffett. You're hoarding cash, or you're waiting for that moment to strike. Like
I'm hoarding. I am hoarding a little bit of cash, but yeah.
Dan is smog.
Got to keep some powder dry.
Sitting on his hoard of gold, waiting for his moment to strike, listeners. Now it's your time to strike, though. It's time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everyone, welcome to the mail call. And let's start right now. Dan, we got a hot one. People are fighting fast and furious on our Twitter. You can get in on the action right now at Options on Twitter, listeners, to make your voice heard. Join in the debate. We said, Dan, last time Trump took office, back in the beginning of 2017, volatility went to die. VIX hit single digits and stayed there for a large part of the year. Do you think we'll see a repeat in 2025? Quite simply, Dan, this is what people are debating now. Quite simply, will VIX close in single digits at least once next year? Very simple. Yes or no, Dan? That's all we're looking for. What are you feeling? This time next year, are we hitting single digits at all at least once?
Are we hitting at least once?
Closing. I asked to close in single digits.
Yeah. If there is a binary option on that, I'm in. We'll definitely hit close in single digits at least once next year, for sure.
Dan, our audience is almost exactly split, which is kind of crazy. The no's were taking it early, roughly 2/3, and now it has moved to almost exactly even. 49.1% for yes, 50.9% for no. So, Dan, it is a hotly contentious debate. A lot of people chiming in. UVXY trader saying people forget it was dead for a good portion of 2016 as well. And they said those were his two best ROI years ever. I know for a fact he likes to write premium. So that gets back to what I say. Some people really like to write premium in low vol markets, Dan, because they tend to keep it. You get less, but you keep it. Age of Aquarius says still too much geopolitical risk. I don't think we see single digits for 2025 with Ukraine, Israel, and Iran still powder kegs. Good point. A lot of geopolitical risk lurking out there, Dan. A lot of people just say they want contango. They're very excited. This one guy, Boatley, says the bull rally could go for the next 10 years, Dan. Which way is he leaning, I wonder, in the market out there right now? So get over there, listeners. That is hot and heavy right now as you're listening to this. So get over there. Maybe you agree with Dan. Maybe you disagree. It's a very hot issue right now. Get over there and make your voice heard. We also asked you, as kind of a fun one from our crypto show. Crypto, in case you haven't been paying attention, listeners, has been on the rampage since the election. Just blowing the doors off. Bitcoin threatening 100K now. Doge on the rampage. Every Shiba Inu, all these garbage. ETH plus north of 3,000. It's been wild times, listeners. So we asked you quite simply last week, was it the wildest week in crypto history? We did this on our Crypto Rundown show on Monday, and 2/3 of you, 66.7%, said yes, 33.3% saying no. So those of you saying no, I get it. But also, just you look at the volume, the products that are available now versus even a year ago, and how much is going up in these products, it's certainly an argument for it being one of the wildest times out there, if not the wildest time in crypto history. All right, Dan, that means we are done with our first episode here. But luckily for you folks, listeners, it's a doubleheader. But Dan, before you go back to the MTM folks, if folks want to join you maybe for a future mastermind, where should they go? What should they do?
Absolutely, Mark. If you want to join us for a future mastermind, well, you got to wait a little bit. We tend to do them about once a year, but get on our list. Head over to markettaker.com, 2 T's in a row, and click on the button on the top right that says join free, and that'll put you on our list. We'll send you a daily video, give you a lot of free education, and who knows, maybe next year you'll be ready to really move your trading forward at our mastermind then.
And when you're doing more options trading, listeners, only one place to go, public.com/options bootcamp. Great, easy way to support the show. Head on over there, tell them you heard about them from this show. That's what that URL does. So you're helping to support the show that's come to you for over a decade now. And maybe while you're there, you kick the tires, maybe you get a rebate or two. Not the worst thing over there. And if you have some feedback on their platform, they're more than willing to hear it. Public.com/options bootcamp. That's going to do it for us this week. But if you're hanging out in the live, we'll be back instantaneously for next week's show right now. Getting a little Thanksgiving present early, listeners. The rest of you will see you back here next week. Another episode of Options Bootcamp. Stay safe out there, everybody.
If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.